Welcome back. You're watching Buy Now, Sell Now on ET Now. We have our experts today, Kunal Bothra as well as Ashish Maheshwari joining us. And we are live on all of our social media platforms. So please do post in your queries. Remember to tell us the stock that you want to ask your query on, the time frame, the time horizon, as well as if you could mention your buy price as well, or in case you're looking for a fresh entry. So let me get going with this first query that we've got is from Mr. Bhandari. He wants a short-term view on Cipla. Kunal, how does Cipla look to you? Pharma stocks have been under pressure, but how does Cipla look to you? Do you think that if you want to make a fresh investment, advisable?
So I think the only two stocks which are looking strong from the pharma pack is Cipla as well as Sun Pharma on the larger cap side. So I think if you're looking out for fresh investments, it makes sense to try and buy the stock at current levels. Even though the stock has given a breakout in the last 1 week and it's moved up quite speedily from those 900 levels towards 1040. So, but I still believe that with momentum on its side, with volumes looking quite attractive for Cipla, there could be a case where the stock may see a lot more extension towards this rally. So I would suggest the buy.
Asian Paints is the next counter, and we've got a viewer, Mr. Murli Mohan from Kerala, who's written in. He's saying that he bought at, or rather, he's thinking about buying at the current levels. It's Ashish currently at 2,943, and of course, the overhang of crude oil prices is there, but traditionally, this company has been viewed as one that is able to pass on increases in input costs to the end consumer. Would you say then that it's still a good buy at this price?
See, there are two, three problems in short term what I see in Asian Paints. First of all, as you rightly mentioned, as the crude prices are going up, whatever the price hike is there, actually you can't pass on to ultimate consumer because in paint market also there's a lot of competition which is building up from other peer sets like Berger and Kansai Nerolac and Indigo Paints, etc. also. Another thing is now this field, this particular industry also, we are going to see entries of newcomers like Aditya Birla Group and as well as even JK Cement announced entry into the paint because paint is quite lucrative business with handsome margins. So now a lot of players are going to come in. So the kind of margins which used to be enjoyed by Asian Paints may not be there. This is the reason why we are seeing some sell off in the stock. And another reason is as FIs are quite bullish on this stock, they are having significant holding in Asian Paints, and they are also liquidating some of their stock holdings. So I suggest you wait for some more time. Once you get the stock at 2750 to 1800 levels, then you can start building up. But in my view, some more correction you should wait for.
Right. Before I go on to the next query, just to mark the recovery that we're seeing in the markets, as you can see on the bottom of the screen, Nifty is at least has risen about over 100 points from the day's lowest point. Right now, we are actually in well above the 16,700 levels for the Nifty. You have Sensex as gaining over 400 points in today's trading session. Let's move on and let me take my next viewer query, and this one is from Narsimha Murthy, and he wants to know whether he can add KPIT to his portfolio right now. What's your take on this one, Kunal? Do you think makes sense to add KPIT right now?
Yes, KPIT has been one of the more formidable mid-cap IT names. You look at the stock, even the last 3 months of correction for majority of these mid-cap IT names, KPIT tech has not corrected till the 200-day moving average, which is at 400 levels, which means that the stock is substantially above its major support levels. That also makes it a more relatively stronger stock in terms of price performance. So in price parameters, I think it's a very strong stock. Has been doing exceptionally well over the last 2.5 3 years, and prior to that as well. And even in this phase of correction, it stands out to be much better and a stronger stock relatively to its other peers. So in both those contexts, makes a lot of sense to try and buy KPIT Tech at current levels.
Okay, this next counter is one of the counters in focus today, Paytm losing ground. Ashish, this next one's for you. If somebody is bought, and this is a question by Mr. Kasturi Rangan, he's saying that he's bought at levels of 2050. And I think there are a lot of investors that have gotten in at elevated levels, even at IPO price. What would you say in terms of advice for them? This is a counter that's gotten drubbed and now it's getting even worse hit because of the latest development. What should you do?
Right. Since IPO time, I am again and again advising to exit from this particular stock because again, in this particular year, we are not going to see a lot of good demand for growth related stocks. This is the time to look at your fundamentally good picks because FIs are not coming in haste to buy these kind of stocks. In fact, these were the stocks where yeah, a lot of FI money came because they were chasing for this growth. And now, as money is going out, you are going to see exodus in stocks like Paytm also. So my suggestion will be even to book loss at this point of time and exit because I see more downside even coming, and this new regulatory issues are last nail in the coffin for these kind of stock. So let's not do try to do bargain hunting because this is the reason why so many retail investors get stuck. Another thing is as even if you do try to do average in these kind of stocks in next quarter or next to next quarter, they are not going to come out with exorbitant set of numbers which may take a stock to new high. Loss is going to be there in Paytm, balance sheet for few more years in my view. So my suggestion will be to exit from the stock, book loss. You can't help it.
Right, that's the view coming in on Paytm from Ashish. Let me take this one is from Amit, and he's saying that he's holding Tata Steel futures at around 1313, and now he's facing losses. He wants to know what should he do? Should he go ahead and book his losses? And he's also asking if there was any, if you could give any suggestion where he could help him cut off his losses. What's your take on this one, Kunal? Tata Steel futures, 1,313 rupees is what Amit has bought it at. What should he do?
Well, I think if it's not to do with intraday, then I would suggest a hold. I think the stock is getting into a 2-day, 3-day consolidation. Maybe 1 or 2 days of more of consolidation could be seen for a stock like Tata Steel. But then I think the chart patterns are very, very strong for the stock. What had transpired, for Tata Steel from the end of February, when the stock had risen from 1070 levels, I think seems to be a change of trend for a stock. So, in between, it's possible that when stocks go through a change of trend, when there is too much of bullishness into the stock, they get into small periods of consolidation. So it depends on your time frame, depends on your risk appetite as well as your holding period. If you are okay to holding the stock for another couple of weeks, I would suggest a hold and possibly look out for targets of even 1450, 1500 over that kind of a time frame.
All right. Ashish, this next one's for you. I think it'll benefit quite a few people tuning in. Naresh from Telangana is writing in and he's asking for a few stocks that he can buy at this current juncture. You mentioned that the stocks, that growth stocks may not be the ones to pay attention to. So which stocks are good buys at this point?
So 2, 3 stocks which I can recommend. My first pick will be Bharti Airtel. In my view, whatever happens in war, you are going to talk over phone or use the data. And Bharti Airtel, is immune to any such war-related shock. So Bharti Airtel is my pick number one. Number two is UPL. You can buy this stock at 730 levels. Company has already announced a buyback, and they are also contemplating to sell this particular company. So this is my pick number two, and third pick is GMDC. In my view, 170 rupees is an excellent price still to own GMDC stock, and you may see even 225, 230 kind of levels in next 6 months in GMDC.
Let's move on, and this next query that I have is coming in from Shiva. And Shiva, we did speak about Jubilant Food Works at length at the beginning of the show, but nevertheless, since you already have purchased Jubilant Food Works at around 3,300 rupees per share, he wants in the longer term, what should he do with this counter? I know that you've given your views on this, Ashish, a counter that you're not too bullish on given that there will be tough competition and that you had advised that you should not make a fresh entry into this one. But Shiva is already invested in this particular counter, so what should he do?
See, it, my suggestion will be to keep a stop loss of still 2,400 rupees because even now we are going to see brokerages coming out and down rating this particular stock. So even it may fall down further. But nevertheless, you can try your luck by keeping a stop loss. And if that stop loss hit, then I think it will be more prudent to exit from this stock and look at some more growth oriented stories. Like I like GNFC, which can give you very good return in next 1 year because of fertilizer prices, the way they are again going up. Also, you can look at JK Cement kind of a stock, which has already corrected quite a bit and can give you 500, 600 rupees kind of upside in next 1 year because their numbers are going to be good. So you can swipe with any of this and keep a stop loss, and Jubilant will be my suggestion.
I don't do this very often, but Mr. Kasturi Rangan points out that if he is to follow the advice and sell Paytm at this juncture, he's going to lose quite a bit of ground. So Kunal, he's asking if he does book out and if he switches out to maybe something in the tech space like a Tech Mahindra or Escorts, is that a good idea, or would you suggest a few other names or another name?
See, one thing is, my advice on Paytm, Alex, if you ask me specifically, I believe it doesn't make sense to exit the stock at current levels. Now, yes, exiting it on a thematic perspective is fine, but then exiting at a certain point as well is very, very intriguing because now what's happened for many of these indicators for the new age stocks, Paytm, etc., even though the data price history is very limited, is that they've come back into deep oversold territories. Now, in the morning, the RSI RSI point 3 times in the last 1 month, which makes it a case of a triple bottom over here possibly. So my sense is that the possibility is very high that the stock can actually go into a short covering bounce over the next maybe couple of weeks. And post that, you might see the stock getting into a drag. So I think a better level to exit would be to try and wait for the stock to get into a bounce mode where you can get a decent bounce into the stock price, exit the stock, and then move on to quality names. I think some of the names which I would probably look out for would definitely be from the banking pack, something which I've been reiterating over the last 1.5 odd months. I think HDFC Bank, ICICI Bank, and
Okay, I think that we're having a bit of an issue. Kunal, if you're still with us, could you complete those recommendations from the banking pack? Which are the names that you were suggesting?
So it would be HDFC Bank, ICICI Bank, and SBI in that same order.
All right. Let me take this one is from Sagar and he wants a view on HDFC Life. He's bought about 2,000 shares at a price of 675 rupees per share. So he's saying he is in pretty deep losses. Now he's holding put options to hedge it. But he wants to know, do you see some more downside as LIC IPO is coming? What's your take on this one, Kunal? HDFC Life is the counter.
See, I think 500 is a good support. Till the time the stock is above 500, we can expect that it can consolidate. I would suggest that if you can average above 530, 535. So I think I've seen the last few days of charts for HDFC Life and closer to 530, 535 is a minor resistance. So if the stock breaks past about this, then you can expect maybe another 25, 30 pointer rally for HDFC Life. But on a positional play, I think 500 seems to be a good support. So if it's still above that 500 mark, I think you can still hold on to your broad positions on HDFC Life.
Okay. The next one's from Sudha, and she's asking about IndiaMart Intermesh, which she bought at levels of 4,800. Ashish, she's asking whether to sell this and buy something like a Navin Fluorine or even an HEG.
Yeah, in fact, I like to add one more stock, that is BSE. In my view, Navin Fluorine, HEG, they are like core cyclical kind of play. But BSE is a stock which has really given very handsome return in last few days. And post it is getting X bonus, you are going to see even more fireworks in BSE. So whatever loss you are incurring in this particular stock, I think you can recover still by buying BSE.
Right. This one is from Naresh and he has L&T Tech for about 25 shares, purchased at 4,952 rupees per share. He wants to know whether he can hold on to this particular counter for the longer term in order to get good returns. What's your take on this one, Ashish, L&T Tech?
Yeah, in my view, tech stock are well poised now for a bounce back. And L&T Tech is again a good company as far as their financials are concerned. Again, whatever the tailwinds they are going to get in USD appreciation, in my view, can continue to hold and even buy more L&T Tech.
The next question is coming in from Sebastian. And Sebastian is asking about Panacea Biotech, which he's bought at levels of 412, and he's lost a significant amount of ground. Kunal, do you have a view on the charts? If so, what should he do?
Yeah, I think I tracked the stock in a few days back, and it looks quite I'd say dismal in terms of price performance. The stock which moved up from 100 levels to 400, and from 400 it's come quite sharply towards I think 185, 187, where it's currently trading. The bigger concern for the stock is that even this sell-off which you've seen for the stock, there has been no major lift-off of volume. So that there typically comes a point in correction when the stock is very attractive and you see value hunters coming trying to buy the stock, and the volumes tends to increase. But we've not seen that period happening for a stock like Panacea Biotech. So I would suggest an exit from the stock at current levels as well.
All right, with that, we'll kickstart with a rapid fire. And just to address this query coming in from Arun Krishnan, Arun, we will be doing a special one of BNS and Lens on recent IPO stock. So we will take that query of yours in that particular segment. But let me move on with this one. This one is coming from Vikas. He wants to know what's happening with IOL Chemicals. The counter was rising 20%, 13% last week. Is it time to sell or keep holding? What's your take on this one, Kunal? IOL Chemicals.
I would suggest a hold on IOL Chemicals. The stock is down today. It looks attractive to
Ashish, Tata Steel bought at levels of 1,312. Hold or sell? This is a question from Arvind.
It's a hold in my view.
Okay, Chinky is saying BEL, why is this particular counter going down in a market that is rising? What's your take on BEL? What should Chinky do with the holding? Ashish? Sorry, Ashish.
Okay. So my suggestion will be to exit from this particular stock. I don't see any major trigger coming in BEL in shorter term. So instead of this, I'll recommend you buy Gujarat Ambuja Exports, because the commodity prices are going up and this is a debt-free company and you are going to see a good set of profitability in Gujarat Ambuja Exports in coming quarters. So swap BEL with Gujarat Ambuja.
Right. A couple more for you, Ashish. Tata Motors bought at levels of 390 and Tata Power bought at levels of 224. Rajarshi wants to know, should he hold on?
If there are shorter term view, then you can continue to hold on. In my view, Tata Motors, again, you will see 425, 430 very soon. And Tata Power also, I am expecting another 10% appreciation as soon as things slightly settle down more.
All right, Nachi wants to know that Z Entertainment for a period of 2 years is a good time to buy at current levels. What's your take, Kunal?
Absolutely, yes. I'll definitely suggest a buy.
PNG Health. The question is for you, Ashish. Would you suggest a buy at this juncture? Vinod is asking.
PNG Health, I've not seen any great set of numbers from PNG Health for quite some time. So my suggestion will be not to buy at this point of time PNG Health.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Ashish, for joining us on the show, giving us your take about Jubilant FoodWorks, what should investors do, as well as helping them with their queries. But on that note, we slip into a break on this edition of Buy Now, Sell Now, but there's lots more lined up for you on the other side, so don't go anywhere.